NIO rumors, this will be huge. Hello guys, welcome to our channel. Today in this video we are going to discuss a stock named NIO. But before we start the video, make sure to give this video a big thumbs up, and if you are new to the channel don't forget to subscribe before leaving. Also hit that bell icon so that you will get notified whenever we will upload a new video. For now, let's get back to the video straight away. For those of you who don't know, NIO Incorporated designs, manufactures, and sells electric vehicles in the People's Republic of China. The company is also involved in the manufacture of e-powertrain, battery packs, and components, and racing management, technology development, and sales and after-sales management activities. Also, it offers power solutions for battery charging needs, and other value-added services. The company was formerly known as NextEV Inc. and changed its name to NIO Inc. in July 2017. NIO Inc. was founded in 2014 and is headquartered in Shanghai, the People's Republic of China. Shares of Chinese electric vehicle maker NIO, NYSE, NIO, were trading higher on Thursday morning, after a Wall Street analyst initiated coverage of the company with a bullish note. As of 10:30 a.m. Eastern Standard Time, NIO's American depositary shares were up about 4.6% from the March 10 closing price. In a new note released after the U.S. markets closed on Wednesday, Mizuho analyst Vijay Rakesh initiated coverage of NIO with a buy rating and a price target of $60. Rakesh wrote that NIO is a leader and innovator in the upscale electric vehicle segment in China, which in turn is the largest global market for electric vehicles. The analyst sees the company's upscale offerings, which can have a lower upfront price than rivals if the buyer opts for NIO's battery subscription service, provide a key differentiator from electric vehicle peers. Rakesh thinks NIO has significant upside ahead as it expands within China and when it enters the European market later this year. During NIO's fourth quarter earnings call on March 1, CEO William Binley confirmed that NIO plans to begin sales in Europe sometime in the second half of 2021. The company has hinted that its European sales will begin in Norway, which has the highest rate of EV adoption in the world. Chinese EV rival XPeng began sales in Norway in December. It appears that NIO stock has established a strong technical floor of around $40. NIO stock briefly dropped below $40 in early December, before quickly recovering back above $40. The same thing happened again 2 weeks later. NIO stock dropped below $40. But only for a moment. Then quickly recovered to $40 plus prices. In other words, recent trading action on NIO stock shows that there is ample demand to buy NIO stock below $40. I don't expect that demand to waver anytime soon. It also helps that NIO stock is offering 68 million American depository shares at $39 per share. That pricing further cements $40 at a floor for NIO stock. As does the fact that NIO stock's 50-day moving average sits at $38. Net, there is a ton of evidence to suggest that NIO stock will bottom at $40. Couple this technical floor with strong fundamentals and an attractive valuation, and you got a compelling reason to buy the dip in NIO stock. Despite recent weakness in NIO stock, the fundamentals underlying the Chinese premium EV maker remain exceptionally favorable. China's auto market is rebounding with vigor. Car sales in China have now risen for 5 straight months, illustrating a robust recovery from the COVID-19 shock earlier in the year. Tons of fiscal stimulus and pent-up consumer demand should help accelerate this recovery in 2021. The China Association of Automobile Manufacturers expects auto sales in the country to rise another 4% in 2021. Electric vehicles are at the forefront of this recovery, thanks to robust government support, shifting consumer demand, and rapidly increasing supply. All of these drivers will remain in place for the foreseeable future. Chinese EV subsidies are going up in 2021. Consumer demand continues to shift in favor of EVs. More and more car companies in China are launching more and more EVs. China EV sales are expected to surge 40% in 2021. More than that, China is targeting 20% EV penetration by 2025 and 50% by 2035, meaning that this market has several years of 40% plus growth ahead of it. In this booming Chinese EV market, NIO is a shining star. The company makes premium ESUVs that are second to none in terms of brand, aesthetic, design, and performance. They are, for all intents and purposes, the best EVs in China, save maybe Tesla cars. That's why amid China's rebounding auto market and sizzling EV market, NIO's delivery volumes have increased by more than 100% for 8 straight months. This trend should persist for the foreseeable future too. Plus, NIO is very likely to expand internationally within the next few years, a move that could inject ample enthusiasm into the stock and significantly extend the company's growth runway. Overall, the fundamentals underlying NIO stock today remain very positive. Thanks to the recent sell-off, NIO stock is now attractively undervalued relative to the company's long-term growth potential. NIO should easily be able to leverage its second-to-none branding, design, and technology to become one of the largest players in China's booming EV market. NIO should also be able to replicate its enormous China success in Europe and North America. Assuming so, NIO easily projects as a 5% plus market share player in the global EV market by 2030. That market should easily measure 25 plus million vehicles by then. A 5% plus share on that implies over 1 million NIO car deliveries in 2030. Indeed, I see annual deliveries climbing to over 1.5 million by 2030. Per my modeling, that sets the stage for over $60 billion in revenues, strong profit margins north of 10%, and earnings per share of at least $5.50, even after factoring in recent dilution. Based on a 20x forward earnings multiple and an 8% annual discount rate, that implies a 2020 price target for NIO stock of $55. NIO stock is a long-term winner at the epicenter of the EV revolution. Recent geopolitical noise and share offerings are just near-term noise creating ephemeral weakness in the stock. What do we do when long-term winners plunge on near-term headwinds? NIO stock is no different. Now that technical support has shown up around $40, it's time to get greedy while the market is being fearful. NIO said its sales in the Q1 of 2021 would reach 20,000, which would be more than 5 times the amount it sold during the same period of 2020. In the first 2 months of 2021, its combined sales totaled over 12,000 vehicles. January car deliveries, for example, were 352% up year-on-year, and were its 10th month of double-digit growth. China is going to be the major electric vehicle (EV) consumer this decade. According to a report by Deloitte, China will hold 49% of the EV market share worldwide by 2030. And in 2021, Chinese auto sales are expected to grow 4%, which is 1.2 million cars. The Chinese government supports NIO, which is likely to boost its efforts and help retain its domestic market share. I would be happy with NIO just trying to take claim as China's #1 EV company, but it has stated it plans to enter the European market later this year, and a Deutsche Bank report in February showed that the company had posted job listings relating to its ambitions to grow in the US market. Shanghai Securities News said recently, don't be surprised to see NIO at Sinopec's gas stations in the future. The partnership between the two is approaching. This could be a game changer for NIO. The company uses a battery swap model compared to competitors where customers can pay a monthly fee. This works where customers loan a battery, which they swap at any NIO station, therefore not having to deal with charge time and no upfront cost for the battery. If NIO and Sinopec were able to reach an agreement on allowing NIO to operate this service at some of its 30,000 stations, this could be very positive for NIO's expansion. Deutsche Bank analyst Edison Yu said that NIO's revenue in Q4 was largely in line with expectations, and its guidance for the first quarter was impressive, while sales could start overseas during the year. The team raised its full-year sales estimate for NIO by 6,000 units to 96,000 units. They also reiterated their $70 price target on NIO, and see the recent stock weakness as a buying opportunity. In the last year, NIO stock has had overall an incredible run, rising over 1,000%. Therefore, it could be argued that this sell-off recently isn't overdone, and quite small compared to its rise over the last year. Also, a big risk to NIO isn't just Tesla, but the challenge from established carmakers, such as Mercedes and VW. These two giants have both vowed and set aside billions of dollars to spend on their EV offerings over the next few years. They benefit from already being established in all geographical markets that NIO hopes to enter. That's it for today, guys. Let us know in the comments section about your opinion on this stock. Will it be worth buying in 2021? We hope you enjoyed the video. We will bring more amazing videos like this in the future. Until then, goodbye.